Natural gas prices have declined today, supported by the cooler patterns observed in the latest overnight data. This is particularly evident in the GFS data, which showed a significant reduction of 13 cooling degree days. The shift towards cooler temperatures for the upcoming week is to be expected, given that it was initially projected to be the hottest week in over 40 years. Despite the expected surge in demand due to the scorching heat, the market seems to have priced in the anticipated high to very high demand conditions through to around August 23. Forecasts have shown a dip in demand moving into the subsequent week, while gas output remains steady. Analysts highlighted that gas demand, inclusive of exports, would edge up from 103.1 billion cubic feet per day this week to 104.4 in the next. However, this demand forecast is notably diminished from Monday's outlook. Gas output, on the other hand, has been consistent at 101.8 billion cubic feet per day for both July and the ongoing month of August, closely trailing the record of 102.2 billion set in May. Gas flow to major U.S. LNG export plants saw a dip from 12.7 billion cubic feet per day in July to 12.4 this August. This is primarily attributed to production cuts at LNG facilities in Louisiana and Texas. The increased global price hikes have heightened the need for U.S. exports, primarily due to supply interruptions and sanctions related to Ukraine. This change in U.S. LNG export direction is clear. In 2022, 69% of exports were directed towards Europe, a significant jump from 35% in 2021, driven by exporters aiming for improved prices. Nevertheless, as Asian prices continue to increase, a shift in export emphasis towards Asia is expected, which could result in market instability. Given the upcoming surge in demand and the evolving interplay of supply and exports, the short-term perspective for the gas market appears pessimistic. Nevertheless, the interaction between the demands from Asia and Europe for U.S. LNG could play a pivotal role in shaping price trends over the forthcoming weeks. The long-term technicals are slightly bullish, but the short-term outlook indicates a developing downside trend. The current 50-day moving average provides strong support, indicating a high probability of nat gas rebounding from this level, as it has done twice in the last 2 months. A sustained move over the pivot at $2.75 will indicate the buying is getting stronger. This could lead to a near-term acceleration to the upside at $2.85, the nearest target. However, a sustained move under the $2.66 level will indicate the short-term selling pressure is getting stronger, with a retest of $2.60 as the next likely target. Don't forget to smash the like button and turn on your notifications bell if you enjoyed the video. See you in the next one.